Good morning and welcome back. Today I'm going to be giving you a portfolio review and also talking about whether it is time to hold cash. Now this is an open-ended question because everyone in the markets have different strategies, but I'm going to talk about my reasoning on whether it is a good time to start holding cash in anticipation of a further market correction or just maybe as a good risk management strategy. Notably, I should highlight here that my risk management has been awful in previous months since the inception of this portfolio, and we're going to talk about that right now. So the portfolio itself, right, is not doing so well. We're down 56.6%, and that is in about 935 days, so about 2.5 years, maybe a bit longer than that now. And in this time, obviously, we've not returned much on capital. In fact, we've lost an equivalent of an entry-level starter salary, right? That is a high level of money to be losing at the age of 22. I obviously, as always, keep repeating the outlook and how I remain confident, but today we're just mainly going to be talking about cash. Like in this position here, you can see how I'm so heavily exposed into two different stock investments that this has led to a legitimately high level of losses, namely because I had such a high level of exposure to both Boohoo and Games Workshop, so that when they dropped even by 20-25%, a majority of this impact was reflected back into the portfolio. Even though recently in the last few weeks and month or so, we've actually seen a little bit of a bounce back here. We were teetering towards 68% at one point, I believe. I think it was very close to being 70% down or something of that like. And now we're only down 57%, but there is still a long way to go. And in this position, you might argue, well, is it truly a good idea to be holding cash right now? Or alternatively, you're down a significant amount on one of your investments, yet you still hold it. Would this be a good opportunity to be buying more? Is that really the approach you should be taking? Because at the moment, if you can see my average share price for Boohoo on the average bought column, I'm going to be redesigning this, by the way, and I'm going to be changing this greatly. We can see it's about £1.25 a share. Now, that's down significantly from the current price by about 65%. Now, perhaps if I still believe in the company, would be a good time to buy. But at the same time, is there not a value in holding cash or continuing to do so? Is that a good time for this? And I should really clarify this point right now. I don't believe in timing the market. I don't believe that you're going to be able to anticipate a market crash or a market correction in advance of it happening. Now, you might be a specialist analyst in a specific industry or have insider knowledge on certain companies, in which case you may be able to anticipate it on a medium-term horizon. I'm talking over a period of a few years. However, I can tell you right now, you're not going to be able to tell me when exactly the next crash is to the day. You can't just go, oh, actually in December 22nd, right, we're going to have a market crash and it's going to drop 40%. Exactly once it hits 40%, I'm going to time the bottom with my crystal ball and buy more, because realistically that's not going to happen. Therefore, I believe in time in the markets. I believe that an investment over the longer term is likely to generate an average return. The average return of the index funds such as the S&P 500, which tracks the largest 500 companies listed in the US, and that has returned on average about 8% per year over a period of 30 years. Now that is a good return. Now if you want to conform to the average, then it's likely you'd like to buy index funds. However, I believe that I can outperform it by selecting just the better stocks in that selection and hoping to outperform over the longer term like that. However, in a period of economic downturn, in bear markets, for instance, when stocks are falling and their valuations are becoming more favorable to buy, now would be a good time to start using your cash position. However, one could also argue that at the moment there could be further turmoil. We could see Boohoo drop to 20 pence a share, for example, and so actually buying now isn't a good idea. And that's why I kind of believe in the strategy I use is dollar cost averaging. I therefore pay in my monthly salary every single month, obviously, and then I deposit that money into the portfolio and I usually reinvest it immediately. This money then tops up the positions. It allows me to lower my average cost or build a new stake in a position, allows me to be quite flexible and also be a little bit more carefree on risk management. However, this approach for the last 30 months or so hasn't really been that effective, because after all, I've lost a significant amount of my capital. Now, I still believe over the longer term this is an effective approach, and that over 20 or 30 years I'll be laughing because of the amount I would have deposited at such a young age, given the time to compound, and providing the investments remain to be a good quality, or I cut them before they obviously lose that quality in their fundamentals, then I believe I'll have a remarkable performance, or one that is of good performance. I'd be happy with it at the end result. But at the moment, in the tough times where I'm down 56%, now is the time to question it. Is my strategy a good one? Or do some adaptations need to be made? I do believe firmly that a strategy needs to be stuck to. I don't feel it's a wise idea in this position to be changing your strategy dramatically. You might have started as a long-term investor and then decided, oh, actually, I'm going to trade stocks daily. I don't think that's a wise move whatsoever. But I do believe that adapting a strategy and trying to improve it in a small and different way over a period of time, those, as it said, aggregation of marginal gains, small improvements over a longer period of time can make a vast difference to the outcome or to the overall product, right? And these improvements can make a large gain. Now in this position, I've now got a cash position of 4.7%. Should I be holding this? At the moment, there is a lot of bad news in the markets, as we can see. I mean, a good example of this will be on Twitter, which we can see here. And this is from e-commerce shares or Wasteland Capital. And this is Amazon. Amazon lately has dropped a significant amount. And we're talking about 17% after or post-market. And we're seeing here that these results, whilst they're growing, and they're not bad necessarily, they've seen net sales increase 15% the third quarter. That what they've also shown is that actually they've seen a much higher level of cash burn. Now, this is interesting, but look at all the negativity, right? The first line here, the rings of pain. And then it's a business that can't support itself unless the government imposes lockdowns. Now, this is quite extreme negativity. And actually, to be fair to this person, they are quite negative a lot, although they were more positive on Apple's recent results. It could just be this kind of person is a perma bear, doesn't really believe in the outcome. But then again, I also kind of recall about 12 months ago, they were quite bullish on it. So perhaps they've completely, changed their perspective on this. But it's like to say, well, if the average people in the markets right now are fearing or have a high level of fear, there's blood in the streets, this could be a good time to buy. So how would you use that cash position? How can you effectively go, right, I'm going to deploy this cash at a good investment? And I think really it comes down to setting price targets. It's identifying the investments you like, filtering through however many stocks you're looking for. So for me, it might be the UK markets. It might be exclusively the FTSE 350, which is a lie because I hold Boohoo, and that's AIM listed. I might go in those 350 stocks. I've now identified 5 or 6 stocks that I think are of a good quality, and perhaps only one of them at the moment is in a price target that I think deems good value. Now that goes more to a value investment strategy, but that could be a good way of combining a growth portfolio and also holding cash in reserve. Perhaps setting a maximum position size for your cash can also be a good strategy to have in place to not get caught up and not hold too much cash, especially at a younger age. You don't want to be sat 50% cash at a young age waiting for the next crash just to find in 5-10 years time you never actually found that crash, or you never actually found that perfect investment and therefore never bought anything, and now you're holding 70% cash with inflation running at about 10%. See, that's just not going to work. But therefore going, okay, look, I've got 15 to 20% cash, my maximum cash position is 25%, I want to be looking for some good deals, and perhaps as your cash position becomes higher, you might be more pressured. You might be going, okay, look, I'm going to find a good bargain. I'm going to set more price targets, going to broaden my horizons, going to read up on more companies, which I do believe is a good thing. I think abundance of investments in the stock market or abundance of investment ideas in the stock market can help you clarify and really filter through and find the best, because you can therefore very easily sift through what you believe to be low quality and high quality. And as I say, in this case, I think setting a price target here could be very effective. Now you could do this for a few models, discounted cash flow. You could be doing it on just a price to book valuation, or even an EBITDA to enterprise value. You could be doing it on many different things. But identifying that price target will at least allow you to go, you know what, look, Boohoo under 50 pence a share is a buy in my opinion, therefore I should be buying more. That might be your own due diligence, but that could be a good way to therefore go, you know what, look, I'm going to hold some cash. If some of my stocks hit below these price targets or my shopping list, especially in a market crash, I'm gobbing everywhere. I've spat loads today. If this happens, then hey, look, I can buy loads of this investment and it's happy days. Thank you for watching. Have a fantastic day. I hope you like this video. Peace.